Our next session is going to be shifting focus a little bit to the successes of Southeast Asia, an area that has had some pretty good achievements when it comes to impact investment. And I'm delighted to hand over the word and the stage to Farida El Agami, the Managing Director of the Tharawat Family Business Forum. Farida.
Thank you, Andrew, for the introduction. Welcome, everyone, to our deep dive session on impact investing in Southeast Asia. My name is Farida El Agami. I'm the General Manager of the Tharawat Family Business Forum, and it's my pleasure to guide you to today's session. Impact investing throughout the world is experiencing significant year-over-year growth. But of course, different geographic regions and investment sectors are at a different stage of maturity. In this conversation, we will talk with Beau Seil, a longtime impact fund manager who has been a part of the impact investing industry before it was even called impact. So welcome, Beau, to this conversation.
Thank you. Yeah.
We will in this session, we will talk about, first of all, the growth and success of impact investing in South and Southeast Asia. We will talk about how the global impact investing market has changed over the last 15 years. And we will try to generate some ideas on how the MENA, a region that actually only accounts for 2 to 3% of the global investment market, can become an attractive international impact can become attractive for international impact funds and entrepreneurs looking to launch companies. So, Beau, let me start right away with a bit of a perhaps philosophical question. It can be argued that all companies have impact. So why does impact investing even matter, especially in emerging markets?
Yeah, I think it's a great question, and thanks for starting with that. For the last 12 years, my business partners and I have been investing across South and Southeast Asia, and one of my business partners started doing this almost 20 years ago, right? So you can even see there weren't even definitions of impact investing at the time. So we weren't even having conversations of why does impact investing matter. We were just backing companies that we thought were having a really positive impact on the lives of low and middle income people across the region. So today it looks a little bit different, right? I mean, I think that the democratization of venture capital has become something important. And so I'm going to talk more from a venture capital fund manager perspective as opposed to the entire asset class. So we can't go into real estate. I mean, impact is really a lens to me. It's not really an asset class because every single asset class you can invest with an impact lens. So today from a venture capital perspective of backing early stage companies that are trying to create not only the products and services of the future, but also the companies of the future and the business models of the future that are using economic models to kind of create what I would say the world that we want to live in and the way they engage with employees and stakeholders. It's not just a, centrally controlled asset that is making it, tough for everybody to, make a living, right? Like we've seen this rise over the last few years of nationalism across the world. And oftentimes I think a lot of it is tied to, not solely, but a lot of it is tied to people feeling growing income inequality and a difficult time, making ends meet, providing opportunities for their families and their kids. So I think we're at this interesting point where now with technology really, the cost of mobile technology going down, the cost of, essentially building companies and then venture capital essentially becoming a type of investing model that has globally, oftentimes at the current time, people do not think that just because it's a company that's serving low and middle income people that it's not a good business model. Because China, we've seen the growth of companies that are serving tier 2 and tier 3 cities in China. India has proven some of this out. So where the mass market of consumers that are rising from into the middle class are coming from, people are just thinking those are great opportunities. So in the past, when oftentimes the business models we were backing, the additionality that we brought was not only the strategic value, but primarily it was entrepreneurs couldn't find capital from other investors. So today, the reason why I think impact investing really matters, it's really the intentionality around it. It's not just investing in the products and services of the future. It's what are the types of companies that we want to see? We at Patamar, we back companies that not only have a product and service that seem to fit with the UN Sustainable Development Goals, but we are investing in impact-driven entrepreneurs that are building companies with impact at the core of their DNA and their culture. And the reason why we think that is critically important now is if we fundamentally believe that technology platforms and companies are going to essentially change the way that the world works, we need to actually back those companies from the very beginning with the lens and the way that they want to be built. So, for example, just as a child, if their parents raise them to focus on certain things, it's actually very difficult to change them when they get to like 19, 20 years old to take a different perspective. It'll oftentimes take maybe, a lot of therapy, or it will take like, hey, I met these random people, that have completely changed my outlook on life, but then they need to go through behavioral change. I think it's the same way with companies. If we see that founders and early stage investors own most of these companies, have the most impact on how these companies are built from the beginning, and then they get to maturity, at that point, like it's kind of set. Now it can get changed, and people can come in and have a different influence or steer the company in a different way. But if you fundamentally build a company with impact at the DNA and core of the culture, it's actually quite difficult to do it. So that's why we think impact investing from the very beginning, all the way through the capital stack, through growth capital, through private equity, all the way into the IPO markets. But at the early stage, it's necessary just as it is at the later stage.
So let me just ask you, before we go to your experience in Southeast Asia, which I think is really, really relevant to this region, right? Because it is a region with kind of fast economic growth, certain socio-cultural challenges, and they kind of can compare to some of the regions or some of the countries in the MENA. But before we go to that, let me challenge this idea of impact a little bit, because I feel from my observation, there seem to be two trends. The first trend within impact seems to be that it's an amazing add-on for people who like to be perceived in a certain light, right? So I see that it kind of sometimes adds to almost decorating a portfolio of investments, to be able to say, I do contribute to the good of humanity. Look, I am impact investing as well. Right. The other side of the development that I see, so kind of that side is a bit of a kind of a hype / marketing aspect of impact investing. The other side that I see is that when we look at big organizations like BlackRock, for example, and their signaling of how they look at the bottom line of their companies and kind of start talking about triple bottom line and start talking about kind of including holistic ways of looking at the companies that they end up investing in. One might argue that perhaps the impact investing field will at some point disappear, because it should become the norm to look at the impact of the companies that you're looking to invest in. Which direction do you think it's going in the West, and which direction do you think it's going in fast growth markets or emerging markets?
Yeah, it's a great question. I mean, I think you're dealing with a lot of dynamics at play, right? And listen, this is a process that's going to be a little bit different in different markets, right? Obviously, in the West, you're dealing with actually quite well-functioning economies for the most part, right? I mean, obviously, there's problems. Nowhere's got it totally figured out. But when you're talking about the types of impact investing opportunities that, for example, we see in South and Southeast Asia, where logistics infrastructure and basic products and services are being built for the first time, to include most of the populations that they work with, right? Like that's a very different thing than saying, hey, what does an impact investing strategy look like in the US, where you're trying to use maybe active governance to try and take companies in a new direction in the way that they try and use their already built platforms to continue to create incremental change. Like in South and Southeast Asia, oftentimes we're looking at things where it's just like a complete vacuum, right? Or a system which is incredibly inefficient, that can be revamped through digital technologies, right? Like So, to put it simply, I mean, I think I can only really talk about what our experience is, which is, I think that you're going to see the whole range right now. You are going to see people who've been longtime impact investors who have got a deep thesis, deep way of approaching it. And it's not just measuring a couple metrics. Like I like to say that, metrics are necessary, but they're not enough. It needs to be very intentional. And I think that that's where we're seeing some of the changes where people are building products, investment products that may just be tracking some metrics, but they're not fundamentally trying to intentionally create change. Now, like, I think there's a lot of people, even at the big institutions, who actually are very intentional about it, right? So I don't want to lump anybody in any sort of bracket. You just have to be, as an investor, actually quite savvy in understanding this stuff and, understanding how deep it is in what's going on. Like, because there's even venture funds in emerging markets who take more of an impact light approach as opposed to an impact, integrated approach. And because of where their sources of capital are coming from, and their sources of capital saying, hey, we need you to provide metrics on X, Y, and Z, but they may not have the experience or the lens of saying, hey, how do we create and maximize impact from day one, right? Like, it's just different,
Yeah. So it's interesting because it kind of segues to my next question, which is how really you have seen the Southeast Asian impact investing market transform over the past, let's say, 10 years. Maybe you can give us a bit of an insight, because I do think it will really help us understand our situation in the MENA a bit better.
Yeah. So I always like to say hey, every market on the impact investing side kind of goes through similar trends and dynamics, as going from complete infancy to what we consider maturity today. But what I think of as maturity today is maybe, we're thinking about a really long race and we're kind of only a couple steps into it. So think about this as a marathon, and maybe we're in the first hour of the marathon in some markets, and we're in the first 5 minutes of the marathon in other markets. And I may be generous on the hour in some markets as well, being a whole hour in. So from my perspective, what we've seen in South and Southeast Asia is it initially started where you had essentially most of the impact investing happening at the early stage. It was more venture capital type opportunities, right? And then you had things that had become a little bit more proven out on clean energy, where essentially big projects in China, in other parts of South and Southeast Asia started to pop up. So I always like to say clean energy was on a different curve than other types of impact investing, which are dealing with kind of the human dynamic, right?
Sure.
So what we saw
is also kind of an obvious choice as well. Kind of it's institutional, it's big projects. It kind of is quite glaringly obvious, other than some of the more intrinsic kind of models.
Right. And you think early on how long it took to get people comfortable with investing in clean energy. It went through an incredibly long gestation period before it became a product where people were backing large, off-grid solar projects and different things. So, from my perspective, in the early days around the type of investing we were doing, which had more of the human element as opposed to the environmental element, people thought we were literally just giving money away and calling it investments. I would go in and talk with potential LPs, investors and funds, and talk with other groups. And literally they say, but, you're not trying to make money, right? And I said, well, actually, small is beautiful, but scale is necessary, right? And the only way that you can scale solutions is essentially there needs to be some sort of a market dynamic to them. So, we were early investors into microfinance banks in India. What we saw there was people thought it was philanthropy at the very beginning because no companies had ever been invested into. And granted, it hadn't been proven yet. So you could understand why people maybe had that concept. Then, as the microfinance institutions that my business partner invested into through a different fund than what we're running right now, those started to scale up and they went public on the Bombay Stock Exchange, right? So during that gestation period, you started to say, hey, actually, this is a good business model. Traditional venture capital firms would come in, then traditional private equity firms would come in, and then all of a sudden your retail investors in the IPO markets responded. So when we first started then investing in Southeast Asia into other models outside of microfinance, we found that same kind of hesitancy around people saying, hey, you're just giving money away. And I'm like, well, that's what you used to say to us when we were trying to get microfinance off the ground. Like, so we're just trying to do the next step, right? Just like a good venture investor would.
Yeah.
And listen, not every business model is going to be venture backable. You're going to have good impact investments. You're going to have impact investments that don't perform. And that's both on the financial return standpoint and also on the impact returns. Like you're going to have portfolio risk on the financial return side and also on the impact side. So what I wanted to say was it started off that nobody recognized it. They thought we were giving money away. Then other investors on the private side started to come in. Then you went to the IPO markets in India. In Southeast Asia, what we've seen is people now recognize the mass market of low and middle income people through reaching them through technology services as actual viable investment opportunities. We're seeing companies that are helping small shopkeepers come online, trucking and logistics companies using almost like a Uber or Careem type, connecting model between shippers and truckers, right? Like, so people are recognizing these things now. So now it's actually not the additionality of capital in certain sectors. Now there are models that still haven't been proven, and those are oftentimes going to take really thesis driven and thinking impact investors to pay attention to it. But, it went from this philanthropy, gestation period around clean energy in South and Southeast Asia to VC, PE coming in, retail markets really responding. And now one of the things that I actually find really cool is a lot of the sovereign wealth funds in Southeast Asia, especially in Singapore, have built their own ESG impact and sustainability teams, launching their own funds that are focused on those things, either within the organization or fully funded by them. So I think that when we think about MENA, it's kind of in those early days of where this started in Southeast Asia, maybe 10 years ago, with bigger markets. And, like Indonesia has 250 million people.
I was going to say, obviously market size helps, right, in Southeast Asia. And I think what we obviously want to look at in the MENA is, and you have quite a good understanding of what's happening in this region. What do you feel we can learn concretely? Like, what can we do perhaps differently? What should we do differently? What can we do better? How can we make sure that, I like the fact that you call impact investing not kind of an asset class, but a lens. And I think what we are all trying to promote is to apply that lens to pretty much anything we do. So how can we promote that more, and what can we learn from the Southeast Asian experience?
Yeah, I think that, one, it has to do with, people often ask, like, what gets things going, the entrepreneurs or the investment capital? And I say both.
Chicken and egg.
Yeah, I mean, sometimes it's some investors who essentially say, hey, this is what I'm looking for, and then entrepreneurs respond. Sometimes it's entrepreneurs, actually more often I would say it's entrepreneurs who come up with ideas and then find some investors through a really long search process and pitching to a whole bunch of people who are like, actually, this is really cool. And I think that, some people who are willing to take risk, almost like, the early stage venture capitalists in the US weren't even called venture capitalists, but it goes back a really long time, right? Like, to the whaling industry, and then it went into electricity and like JP Morgan backing different things. And, so what I think for MENA, which is interesting, is obviously it's the region itself is quite diversified, right? And you and I have talked about a lot of this in the past, which is, you kind of need to go country by country to really get into this, not just on a regional basis. So I think that one of the things that I find really fascinating about what we saw in South and Southeast Asia is a lot of the family offices that were investing in venture funds or investing into other types of funds globally started to then, learning through those either direct investments or fund investments, started to say, hey, what can we do here in MENA? And, or sorry, what can we do here in Southeast Asia? And then it would be kind of applying the same thing, because there's an incredibly, large group of smart people in this part of the world that know how to run companies. And now you may be looking to these other investors or entrepreneurs in other markets who have the expertise, who've built those things that you haven't quite done yet. But it's just as I saw in Southeast Asia, family offices moving from the trader mentality into the we're going to build companies mentality, and like, what does the future look like and how do we integrate technology? They hadn't done it before. So then they made investments in companies or in funds to really learn how that was done. So on the impact investing side, I think it's not a lot different. Like with the innovation ecosystem, it's, we actually know this market better than anybody else. we're probably the best people to invest in them. And actually entrepreneurs probably from the region are some of the best prepared to actually address the challenges that are here and the opportunities that are here.
Which I think is really important to say, because obviously if we look at how, we were wondering how attractive is the MENA for impact investors at this time. And I think, first of all, I fully appreciate the fact that you've kind of made a difference between countries, because I do think there are substantial differences across the MENA with regards to that. But I also agree with you that each country has actually its large portion of ingenuity and business acumen that is budding in society. And sometimes I do feel that we are perhaps not supporting that ecosystem the right way. So, do you feel that there is that attraction to the MENA for impact investors, perhaps from the outside? Is that a conversation that you see happening?
It's hard, right? Because I think that you have to break it down, like in funds or investors coming into MENA. I think it's a part of the world that a lot of people still don't understand that well, or some reason are scared of it, right? And oftentimes there's some sort of like geopolitical headline risks, or hey, it's the world operates very differently. So I think you'll have, just as you had almost the kind of the pioneers going into some of these South and Southeast Asian markets who weren't from there early on. I mean, one of the things that's interesting is the grand majority of impact investment capital that went into microfinance institutions in India did not come from investors in India, which was always so fascinating to me, to be like, wow, you actually understand this problem better than anybody. But the market hadn't picked up on this idea of what we allocate our assets to yet. So it took more risk tolerant, or I should say people on the continuum of risk return that was a little bit higher coming into the market to get it going. And I think one of the exciting parts about this region is you actually have a lot of investors who are investing in global venture funds and are very familiar with the innovation ecosystem. So as you apply that to impact, it's the same sort of thing. It's really not that different. We're just talking about risk. And and I often say that impact investing is not an issue of what is the company or is it a good business model. It's more about the perception of risk, or misperception of risk, or the over perception of risk, as it deals with different types of the ecosystem, different type of customers, right? Like it just takes getting more comfortable and understanding of what that problem set is. Yeah.
Well, sadly, we have to come to an end of our conversation. I mean, there's obviously a lot of topics we could continue deep diving on, but perhaps as a last point, a couple of takeaway pointers that you could give us with regards to advice for entrepreneurs and investors in the region. So just kind of summarizing perhaps some of the points that you've made.
Yeah, I mean, from an entrepreneur's perspective, just don't get too discouraged, because everybody often looks at other markets as if they're so much further ahead, or those entrepreneurs had it so much easier. And I would tell you, those early entrepreneurs, they didn't, right? It's like, I like to say, hey, I've been to this movie before, and the cast of characters may be a little bit different, and some of the plot twists will be a little bit different, but where we end up is kind of in the same place. And it's the same thing with venture capital, right? It's, the development of the innovation ecosystems, they kind of follow a certain path, and the timing may be a little bit on or off. So just don't get too discouraged, especially if you're impact driven and you're trying to solve a problem, and that's really what motivates you. But the timing may be off. So just ask yourself those questions: is the timing off? Also understand that the type of company that maybe you as an entrepreneur would try and build, you just have to think very reasonably about all the dynamics that other companies have. So just don't think just because you're an impactful company that you get to play by a completely different set of rules. That people aren't going to follow the same types of like business analysis. You just can't, the laws of physics and investing, you can't bend too far, right? From more of an investor standpoint, it's going to just taking some risks. You don't know exactly when the market timing is going to kick in. We even have this conversation with our team, is like, hey, we think this is the right concept, but maybe it's just a little bit too early. So for investors, it's, like, learn from the best that you see in other markets, but don't think that those people are so much smarter than you, because you bring a lot to the table as well. And I actually think that local investors, backing local entrepreneurs is the way that all of these markets turn. Like in Indonesia, and early on, it was oftentimes the early investments were from external investment funds into entrepreneurs that were either expats or repats that had gone and worked overseas for a long time. Where that's changing now is that you're starting to see Indonesian-only venture firms, family offices investing in Indonesian entrepreneurs that may or may not have worked overseas, but really understand the process. So this is going to go through an evolution, and I think it's just an exciting time. And just realize if you're trying to build a company for a small market, you may not be raising capital in the same way that somebody who's going after a huge market would go after.
Of course. Yeah. Well, thank you so much, Beau. I think those were very valuable insights. I think it's always good to understand different types of kind of regional developments when it comes to impact investing, and also perhaps as a region, not only look at the West and be bold enough to kind of look at other geographical areas and learn from them. Always a pleasure to speak with you, Beau, and I'd like to thank our audience also for being here with us. Thanks, everyone.
Thanks.